Thanks everyone for sticking around to hear my presentation. I flew in from Perth yesterday, so I'm glad there's at least somebody here in the hall to listen. As the slide says, I'm going to focus the presentation today on our Low Herma project, which we would call our flagship project. And if I can figure out how to make this work, so please consider the disclaimer. I'm not providing investment advice. So some key statistics, a lot of which you've already heard today, so I'm going to whiz through this pretty fast. The reason why we're in the US and we're an ASX listed company, the reason why we're in the US is this obvious problem with the US being the largest consumer of uranium on the planet, needing around 50 million pounds a year, but according to the EIA's latest statistics, only produced about 50,000 pounds last year. And we know that's changing, and that's, I guess, obvious from all of the presentations you've heard today. We know there's a shortfall, and I think the panel at lunchtime said it was 40 million pounds, but it's in that region, 30 to 50 million pounds a year. I've read somewhere that cumulatively that could be 1.5 billion pounds of shortfall by 2040. I don't know if that's a real number, but it's going to be a lot. We know that there's now 2 markets on the planet, and I read something this morning that said we might be heading towards trifurcation of the market, but I guess the core thing here is that we're heading back to the old days of the bifurcated market before the Berlin Wall came down, and that's a reality regardless of whether or not the Russian uranium ban is put into place or not. We know that there's 5 ISR plants in the US that are either ramping up, like UR Energy, due to restart, or move on and build, and that includes Lost Creek, it includes UEC, and we know that Encore are back in production as well, so I'll talk about that a little bit more, but not in too much detail. We like Wyoming, as Dev does. There's a lot of people who've been saying that today. There's 7 permitted facilities within 100 miles of our projects. We're about 10 miles from Cameco's Smith Ranch Highland, the largest permitted ISR facility in the US, so we think we're in a good neighbourhood. We've got 7.4 million pounds of defined inferred resource to date, and a fairly significant exploration target on top of that. The ASX doesn't let me say some of these things in writing, but I can tell you them. And we think that the $70 a pound actually is enough to make these projects pretty attractive. It's great that the price is a lot higher than that, but we think the projects can be attractive at as low as $70 a pound. So just reflecting on who is in production or getting back in production, I think I said Lost Creek's obviously ramped up. We've got UEC's Willow Creek just up the road, so Lost Creek is about 10 miles away from our Great Divide Basin project, or 15. We've got Willow Creek due to come back into production in August. We know the Lance project is due at the end of the year. Not quite clear on what's going to happen with Nichols Ranch and the Cameco projects, but we would expect at some stage in the next year or so we might see them come back into production as well. So these are the companies that are responding. Clearly I haven't got Encore on this chart because they're not in Wyoming, but they are responding as well. So where we are now versus when we first started it back in 2019 is chalk and cheese, with a uranium price at wherever it is, $95, and these guys back in production. So our lead project, as I said, is Low Herma, and that's what I'm going to focus on today, but we also have a package of ground in the Great Divide Basin, around 30,000 acres there, which covers our Green Mountain project, but also our Great Divide package, which is centred around our Thor project. So we have drilled 2 seasons in the Great Divide Basin. We've also got some projects in Utah, some conventional projects in the Henry Mountains, pretty close to Anfield, 100 miles away from Energy Fuels' White Mesa plant. I won't talk about those too much today, but they have become a lot more interesting than they were 2 years ago, given all the activity that's happening in that part of the world. So here's the map. The yellow dot in the middle is the Low Herma project. The 2 yellow dots down closer to me are our Great Divide projects, very close to Lost Creek. And there's all of the permitted facilities in that area. So it's been a very productive part of the world for uranium mining in the past. I think Dev and others have spoken about it. The US did produce 44 million pounds at the peak at one point. and clearly at the moment virtually nothing. So a lot of it came out of this area, and we think this will be the focus for projects in the short term going forward. So just to highlight what the resources are: low Herma, 5.71 million pounds at 630 ppm, and then in the Great Divide we've got 1.66 million pounds at 570 ppm. And the grades there are, we know that Lost Creek is in around that sort of 400 to 500 ppm range. They're certainly grades that get produced in the basin. There's no problem with those grades. I guess it comes down to grade thickness and a bunch of other things, but we believe they're viable at those grades. We've got an exploration target there of an additional 12 to 20 million pounds on top of that if we are able to bring that into resource. So just our Low Herma project, as I've said, pretty close to Cameco's Smith Ranch Highland. We bought a 1970s drill database from Pioneer Oil Company, drilled that back in the 70s. We were able to scan and digitise it and bring it into resource, and that allowed us to quote that resource of 5.7 million pounds at 630 ppm. So what we did is drilled at the end of last year so that we could verify that database and have some confidence around that. There's sort of 880 drill holes there in the property. We looking to replicate that. I think, as Michael said at Nuclear Fuels, he's planning to drill 600 or 700 holes in the next season. Well, we already had those 880 holes, so we drilled 25 at the end of last year just to verify that database, and we've got another drilling campaign planned for the middle of this year, Q3. So in the drilling program that we did at the back end of last year, we were also able to confirm some of our exploration hypotheses, a long trend in the Wasatch, but also into the deeper part of the Wasatch Formation, then down into the Fort Union. And I think David asked a question before about whether the Fort Union was a productive formation in Wyoming, and that is what Cameco's producing out of 10 miles to our east. And so we know there's juice in there. We don't know how much. It's not included in our resource at the moment. It's not included in our exploration target. But the historical drilling was only down to 300 or 400 feet because it was targeting conventional open pit at that point in the 70s. So we think there's a fair amount of upside here. We're on track with our permitting to drill in Q3, and then we'll do a resource update in Q4. And that resource update will not only increase the inferred pounds, but we'll also be able to bring some of the resource into indicated, and that'll help us then move on to a study, which we may commence at the back end of this year. It's more likely to happen during the first part of next year. So I want to talk briefly about the Great Divide Basin project. You see the large yellow block at the top of the map, that's the Green Mountain project. Just north of that, you've got Rio Tinto's projects. We think there's about maybe £50 million endowment in those projects immediately to the north. You've got Energy Fuel Sheep Mountain. That map's about 25 miles squared. So it's still they're all in pretty close proximity. And then the other project that we drilled on is Thor down the bottom, which is I think it's about 15 miles from Lost Creek. So we think that the deposit's reasonably analogous to Lost Creek. I'll skip through this, but we have drilled a couple of seasons at Thor, and we are planning to drill on Green Mountain this year. We're certainly going to be permitted to do it, and if we have the funds and everything goes according to plan, we may drill on it this year as well. So I just want to talk a little bit about some of the other deposits that we're aware of in the neighbourhood, and I can't show you the economics on this slide, but I can help describe them. For instance, the Gas Hills and Shirley Basin, and I think John would have talked, if you were here listening to him earlier, about the Shirley Basin. They have very positive NPVs, well in excess of $100 million, and very positive IRRs, typically around 100% or more. The Shirley Basin, £8.8 million, and the Gas Hills, £8.14 million. We've got Nichols Ranch there at just over £8 million. Now, we've only got £5.171 million, and we're only at inferred, but you can see where we're heading with the project. And I think Michael Collins from Nuclear Fuels earlier said that they were targeting sort of 10 to 15 million pounds, and of course that's what we're doing too, because we believe at around 10 million pounds you can build a central processing plant, and you can certainly operate them as very profitable satellites if you're getting the resin processed somewhere else. So I thought it was also worth reflecting on company valuations, and please don't take this slide as me suggesting that the other companies are overvalued. Really what I'm trying to say here is that we already have a resource, 7.4 million pounds in Wyoming, and our market capitalisation is fairly modest, and I think there's some upside there. I think the story about the Explorer's not really catching fire yet is relevant, and we would see that as being the opportunity to get involved in our company. So I won't run through everybody on the board. I just want to point out that Matt Hartman joined us in the early part of this year in January. And one of the reasons apart from the fact that we worked with Matt before when he was a consultant at SRK, is that he has the study experience to help run a PEA or a feasibility study for an ISR project. He's worked on Laramide's Church Rock, he's worked on Smith Ranch Highland, I think he's worked on Rosita. He's an engineer and a geologist and got a very good commercial skill set. So we've added him to the team to help with that, drive that study process forward. So our share price, I think today or yesterday in Australia, it was around 0.8, so a little lower than that. So our market cap around 18 to 20, it sort of fluctuates between 18 and 22 million Australian. 2 billion shares on issue. We've got about $2 million of cash left. We did at the end of last quarter, and we've got some bond money due back and a few other things. So just to wrap it up, the things to look forward to this year are the resource development work at Low Herma, so drilling in Q3 and then an update of the mineral resource estimate in Q4. Potentially Green Mountain drilling. We'll certainly get it permitted and maybe we'll drill. We're doing a review of our Utah projects, so we may find a way to commercialise, semi-commercialise, monetise or develop those projects over the coming months. And we're always looking at new opportunities, either with other companies or with our existing projects. So thanks everyone for taking the time to listen, and anyone's got any questions, happy to answer them.